Ladies and gentlemen, good day and welcome to Carysil Limited Q2 and H1 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chirag Parekh, Chairman and Managing Director of Carysil Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on the Carysil Limited Q2 and H1 FY2024 earnings conference call. I hope everybody had a chance to view our financial results and investor presentation, which were posted on the company's website and stock exchanges. I'm accompanied by our CFO/COO, Mr. Anand Sharma, and SGA Investor Relations Advisor on this call today. Allow me to begin by providing you some key economic updates. In the first half of the fiscal year, the global economy began to recover, showing a stable performance in both the Indian and global economic sectors, without any major surprises. Notably, factors like rising inflation and energy price increases have influenced the path of economic growth. However, some sectors of the global economy have demonstrated impressive resilience, particularly those not closely tied to direct consumer demand. As a result, the consequences of economic slowdown have been milder than initially anticipated. The market for home improvements have been expanding rapidly in recent years, changing preferences, customers' predisposition towards improved aesthetics and desire for comfort, important factors of influence. As a result, consumers are placing a greater emphasis on designing kitchens, bathrooms with their homes and lifestyles. We have carefully aligned our strategies to make India the world's premier manufacturing hub and top alternative destination. Demand for luxury and premium goods have been propelled by shifting consumer preferences, accelerating urbanization, and emerging new lifestyle products. Despite the unstable geopolitical circumstances, we continue to witness an improved inflow of new orders and potential prospects that we expect to tap in the near future. Similarly, the cost of raw materials have been stable, and we anticipate this trend should continue. As discussed during the last quarter, we have started the assembly line of the faucets. We showcased our capabilities of a trade show in Mumbai Tech Exhibition, received an overwhelming response from the audience. Additionally, we intend to create a global impact by boosting exports in the coming year via distribution channels. We see potential branding prospects in countries like United Arab Emirates, South Africa, Australia, and new markets such as Oman, Saudi Arabia, and Turkey. To develop the brand identity, we will participate in a number of exhibitions in UAE, United States, where we shall showcase Carysil's credibility, dedication, and reliability to our new products. Then industry risks are considered inevitable and cannot be overlooked. Risks are unavoidable and must be taken seriously in every field. However, the impact can be controlled or mitigated. Our company's adaptability, the resilience of our staff, our team, willingness to embrace change enable us to readily accommodate new circumstances. We at Carysil are well positioned to take advantage of multiple existing market opportunities using both organic and inorganic growth strategies. Our organic growth is accelerating as we strengthen existing capacities to meet the demands of more domestic and international markets. Furthermore, we are actively exploring adjacent segments, exploring new opportunities for future expansion, and making strategic acquisitions in order to strategically expand into untapped markets where our presence was previously limited. This combination approach allows us to leverage our manufacturing capabilities and wide product basket, unlock growth potential, and establish a stronger market presence. Following 3 successful acquisitions in the UK, we made our 4th acquisition in the United States. called United Granite LLC. This acquisition will be complement to existing product range and first of its type organized fabrication business with seamlessly integrated kitchen tops with workstation, kitchen faucets and accessories. This will stimulate the growth of wide range of products. Architects and consumers will be pleased to choose prefabricated kitchen tops from a variety of brands, each of which includes a complete integrated with full complement of accessories. Post acquisition of United Granite, we have retained the entire team except the promoter. The current senior management will lead the business in the future. At present, the company's capacity utilization is 60%, but we are confident that we can increase utilization to 90% levels in coming quarters with improved efficiency. Our goal is to expand our business network across the United States. Currently, it operates 3 regions, Washington, D.C., Virginia, and Maryland. The United Granite EBITDA has always ranged between 7 and 11% over the past 3 years. We estimate this to increase to more than 15% in the coming quarters with increased capacity and better material sourcing and operating leverage. We always look for acquisition with strong cash flow and profitability, and through the acquisition, debt can be serviced straight from the acquired entity's cash flow. United Granite has sufficient cash flow to pay the interest instead of the debt raised for acquisition without putting any strain on its parent company. The United States market is huge, and we believe that the offer complete includes quartz sinks, steel sinks, appliances, faucets, countertop, fab business. We can expand our market base, strengthen our position in the United States. Furthermore, we'll be introducing technology of India's post-acquisition, allowing us to backward integrate our production processes, ultimately lowering the cost of production. Carysil believes that the technology is critical for growth, and we are committed to showcasing modern designs that successfully combine form and function in cutting-edge technology. We have designed new chimney which will be in the best of the class. We are committed to improving our research and development efforts to achieve this excellence. The dedication not only ensures long-term success of our company, but creates more value of our stakeholders. Now, I would like to hand over our call to our CFO, Mr. Anand Sharma, to update you on the company's financial performance. Thank you.
Thank you, sir. Good afternoon, everyone. Let me take you through the consolidated financial performance of the company. Quarter 2 FY24 performance. Consolidated total income stood at 164.5 crore. For quarter 2 FY24, it grew by 18.1% year-on-year and 15.2% on quarter-on-quarter basis. EBITDA for quarter 2 FY24 stood at 33.9 crore, grew by 48.7% YoY and 23.9% quarter-on-quarter basis. EBITDA margin for quarter 2 FY24 stood at 20.6%, increase from 19.2 quarter-on-quarter and 16.3% on YoY basis. Profit after tax and the monetary interest stood at 15.4 crore in Q2 FY24, grew by 67.1% on YoY and 33.4% on quarter-on-quarter basis. Coming to H1 FY24 performance, sales volume for quartz zinc stood at 253,000 units, stainless steel zinc stood at 54,000 units, kitchen appliances and other stood at 28,000 units in H1 FY24. Consolidated total income stood at 307.3 crore for H1 FY24 as compared to 310.6 crore in HY FY23. EBITDA of the company for H124 stood at 61.3 crore as compared to 57.2 crore in HY FY23, growth of 7.2% YoY. EBITDA quarter for H124 stood at 20%. Profit after tax and monetary interest stood at 27 crore in HY24 as compared to 27.9 crore H1 FY23. Gross debt stood at 216 crore as on 30th September 2023. Debt to equity stand at 0.66 as on 30th September 2023. Cash and bank balance stood at 12.5 crore. Thank you. Now I open the floor for question and answer. Over to the operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Garvit Goyal from Invest Analytics. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yes.
Congrats for a good set of numbers. I have first question is on the domestic operation. So, despite a substantial expansion in our distribution network, there appears to be a disparity in the growth of domestic revenues. Like current outlook for domestic revenues in H1 FY24 stands out at 66 CR. That is falling short of our projected yearly guidance of 160 to 170 CR for FY24. So, can you please provide the insights into the factor impeding the growth and how the outlook is going to be in H2?
Yeah, true. All right. So let me answer this. I think the first 6 months we've been trying to expand our dealer network. We kind of consolidate what our efforts in our domestic, and I think the realization you'll see start coming from Q3. Secondly, we also are reorganizing our distribution network, our pricing strategy inside the domestic. I think so that kind of took us about 45 to 60 days time. I think we are all set. We already closed a good October, and I think the domestic sales you'll see a sharp increase starting from Q3. Thank you.
So, are we still intact to the guidance of 30 to 40% growth in domestic revenues over FY23?
Yeah. So we have no efforts left to try to achieve this. Yeah.
Okay. And on the topic of EBITDA margin and PAT margin side, so do you anticipate that EBITDA and PAT margins, which are currently at 20% and 10% respectively for the quarter, will be sustained in the upcoming quarters as revenue increases? Or alternatively, are there any expectations of decline, possibly influenced by the ongoing consolidation of the US acquisition in Q3 and potential rise in marketing expenses as you highlighted in the presentation?
So I believe there's a potential of margin expansion if the revenues grow, which we expect it to be. Second thing, I think the raw material prices are stable. Rest of the other input costs are stable. So I think the company is doing their best to try to maintain at least this 20%. Yes, the US consolidation will come into play. But as also same time with the revenue growth, we are still quite confident that we'll be able to maintain and sustain our EBITDA margins around 20. And I think we always given a range of 18 to 20%, but our efforts will be always that how can we sustain at 20%. Thank you.
Thank you. Sorry to interrupt, Mr. Goyal. May we request you to return to the question queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, we may request participants to limit their questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Chandrakant Tanukan from CD Equity Search. Please go ahead.
Yeah, thank you for taking my question. So how have you been able to grow exports despite the stress in the Western markets?
Yeah, so I think it's a good question, and I told this last time that there would be more opportunities for us because the manufacturing, because most of our competition, or 90% competition comes from the West. So we've been able to grab a lot of market share from our competition. We've been doing as far as our company is concerned, we had expressed last time we're doing everything. We're trying to be very cost efficient, productive. So I think that's coming into play. And we've been able to grab a lot of new customers. We've been able to increase our market share, and I think we are very confident that moving forward, the momentum is going to be on. I think we are probably in the worst of the home improvement scenario, and still I think our company is doing quite well. And I think we still have more opportunities on our way in the coming quarters.
Okay. So, sir, if we see like in Q2 fiscal year 24, we have around 129 crores exports revenue, and in Q2 fiscal year 23, we had 106. So the increase of 23 crores is mostly from which part, like the market share increase or new customers, something like that?
So both, we have increased our market share and we have increased our new customer base.
Okay, sir. So, sir, my second question is, how much is the gestation period for quad sink orders in the newer export market?
Time to mature.
The new export market, so I think the gestation period takes about 90 to 120 days.
Thank you. We move to the next question. Next question is from the line of Vaidik from Monarch Networth Capital Limited. Please go ahead.
Thank you for the opportunity. Congratulations on the good.
So may I request you to use your handset, please?
Am I audible now?
Yes.
Yes.
Please go ahead.
Congratulations on the good set of numbers. So my question over here is that despite of gross margin improvement of 369 bps on a YOY basis and EBITDA margin improvement of 400 bps on a YOY basis, and also we can see that volume numbers for quad sinks has also increased by 17.5% this quarter. But the realization in the quad sinks has not shown such an improvement. Like on a quarter-on-quarter basis, it has decreased by around 7%. So, any comments on that?
No, sir, I think nothing is alarming. I think just there's a product mix. So depends upon which country depends on that. I think it's just a result of a product mix. So it may also happen that the next quarter it may change and can go up. Yeah.
But sir, I still can't understand why there is such a sharp dip on a QQ basis, because if we are seeing an improvement in the gross margin and EBITDA margin, so is there so have we taken any price cut or something, or are there any discounts going on to increase our sales in quad sinks?
No, I don't think. Yeah.
Sorry, I think on the realization side, the numbers what we have not seen any decline. If I go by the average rate also, so our average rate is 5630. See what happened when there is a FOB pricing and CIF pricing. That depends on which customer we are servicing. So there may be some variation quarter to quarter, but if you compare Y and Y, it's already there is an increase.
So your 5527 to 563.
Yes. Yes, sir, I agree to that on a YOY basis there is improvement, but on a QOQ basis there is a sharp decline of 7% in realization.
So that is what I'm explaining. It depends on the customer. If there is a CIF pricing, then the average realization will go up. If the FOB, normally US, what we are doing is FOB. So when there is a more sale on a US, you'll see the price realization lower. When it goes most to the European countries, there are CIF contract, it will go up. But it has nothing to do with the profitability, EBITDA or anything. Okay?
So, sir, you mean to say that our exports in the US have increased, and over there the realization is less, whereas our sales in Europe over there our realization were higher, so that is the reason behind this.
Yes.
There's a higher
It all depends on the contract, because once we have FOB sales, naturally the prices will be lower. When a CIF, insurance and freight is added to the price, it will go up. So otherwise it has no impact on anything or EBITDA profitability.
Okay, sir, got it. That's it from my side.
Thank you. Our next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, hi sir. So for the past 4-5 quarters, you were talking about inventory overhang in the system, which was curtailing your sales growth. But what we see this quarter, you have virtually back to your peak number. So should we assume further built on now on these numbers as we go ahead, and that inventory overhang, as it got resolved and we had added a lot of customers, so can we expect growth momentum to pick up from these numbers?
Yes, absolutely, Siddesh bhai. I think that overhang of the customer stock is over. We are also have a lot of new customer over the horizon, which large so we are in advanced stock for very large quantities for coming for quarter 4 and coming year. So we should be we have a good tailwind, and I think looking at what the current position, I think we are looking at a good growth in the coming quarters.
Okay. What is the quartz volume that we recorded for quarter 2? Was it about 1.5 lakh, closer to that number?
Yes, it was. Granite zinc was close to 1.5 lakh. Yes.
Okay. Yeah. So basically, quarter 1 was 1 lakh, quarter 2 was 1.5 lakh, and we see numbers building up over this 1.5 lakh, right? That's how we should look at it.
Yes. Yes. Yeah.
Okay. Then on the progress on the India side of the business, what kind of growth do you see in the India side of the business for FY24?
So I think the internal plan within us as a company is definitely next year we want to cross 200 crores next year. We had started the first initiative by launching a lot of new products in the STEC exhibition. That is basically for the FY24, which takes about gestation period takes about a couple of months. So we got an overwhelming response to the STEC. And I think we are all, the distributors are excited, architects, projects. We also, as last time announced, we have a new B2B team which is focusing only on architects and projects. We are also able to grab a lot of new projects orders. So I think we are quite confident next year that our aim will be to cross 200 crores in domestic next year.
Okay. So between now and let's say next 2-3 quarters, we will actually see the costing utilization of your capacity going up towards that 11 lakh type of capacity. We will also see the faucets export building up, and you have the stainless steel capacity. I don't know whether it is up and running. If you could just comment there and on the comments what I mean.
Yeah, so I think so you are right on the first 1 and 2 points. On the faucets also, we have started assembling for India. There's also a lot of export opportunities which have got inquiries, as we plan to pack it like in a sink and a faucet in a box. So as far as the your question was on for the appliances, right? The stainless steel things. So the stainless steel thing side, the IKEA business will commence in quarter 4. We also have these new customers which we have been awarded with large volumes in stainless steel things also should start from quarter 4. So I think we are also looking at a good business coming FY24 win for the stainless steel things.
Thank you. Sorry to interrupt, Mr. Cheda. May we request you to rejoin the question queue for follow-up questions, please. Next question is from the line of Bala Murali Krishna Chunalgarh from Oman Investment Advisors. Please go ahead, sir.
Hi, congratulations. And regarding this, our CapEx, I think we have built-in kitchen appliance CapEx plans. So could you please update on that? What is the status of that? It was a little bit delayed earlier.
Sorry to interrupt, sir. May we request
you to not audible.
Yeah, regarding that CapEx of home built-in appliance, kitchen appliance. So could you please update on the status of that? I think it was earlier a little bit delayed by 3 quarters. So what could be the status now?
No, so the built-in appliances factory I think you're talking about, we already started assembling in the quarter 3. We already started a project. We already started manufacturing and assembling the built-in appliances. Yeah. So the project is already started. comments.
Yeah, so we can in the follow-up on that. So can we expect some contribution to the top line in the Q4?
Yeah, we will. Yes. Both on profit built-in appliances, you're able to see some contribution coming from quarter 3.
Okay. And by Q4, if we can achieve this utilization level of 80 to 90% in quad sinks, so we can expect around 200K quad sinks from Q4 onwards. And then maybe we might need to go for some other capex in expansion, quad sinks expansion. Do you have any plans on that? Still, it's not yet planned.
So I would not comment on your 200,000 sinks. What I can only comment is that we are in advanced negotiation. Further, we already have good order booking now, but further for Q4 FY24, we are already in advanced talk with some large customers for bulk quantities, very large quantities. Then I think that should come into play. We are just hoping our best. I think obviously our aim is to utilize our capacity as much as we can in the FY24.
Thank you. Thank you. We move to the next question. Ladies and gentlemen, in the interest of time and fairness to all participants, may we request participants to limit their questions to one or two per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah, hi. Congratulations on great set of numbers. So firstly, sir, can you explain, of the US acquisition that you have made, from when do you expect it to get consolidated into our financials?
So it will start from quarter 3.
Okay. So this basically puts you on the roadmap to achieve your 1,000 crore revenue for 25, correct?
Yeah.
With this acquisition. So on a blended basis, you are there in your near term. So are you all planning that 2 lakh sinks capacity that we had deferred last year? So once you just mentioned that your order book is filled till Q4, so are you planning to make that live again, the 2 lakh sinks that we had deferred?
See, I think I want to say I cannot confirm this. I think our endeavor is to increase the capacity utilization for the granite sink and the stainless steel sink. FY24 company is putting tremendous efforts. Also, repeating, we are in advanced talk with some large quantities with some very prominent customers next year. I think everything gets realized. I think our aim will be to maximize the capacity utilization in FY24. As far as the U.S. business is concerned, yes, we'll start engaging from quarter 3, and we are very confident. We have some more potential opportunities coming forward, coming in the coming quarters, and we feel that we are all in track to achieve 1,000 next year, which we'll start seeing coming from quarter 3.
That's great, sir. And on standalone basis, sir, we have seen the margins going up to 23%. So just on the standalone front, are these margins sustainable, or there also you just want to keep your guidance of 20% for console level?
You see, I think our guidance of 20%, 80% always there. But I think the company has done a great job. Our team has done a great job. We able to control our costs, and so I think potential. Yes, I think 20%. Yes, I think it's a good safe thing to do. Always margin 20% because we need to understand we are still in a very, very uncertain environment. But if the volumes grow further to this, yes, there is a potential that the margins will expand.
Thank you, sir. We move to the next question from Darshil from Crown Capital. Please go ahead.
Yeah. Hi, good evening, sir. Thank you so much for taking my question. So just wanted to know, so what guidance do we give for FY25 and for H2 FY24 with the consolidation of US subsidy coming in? So what kind of revenue guidance?
Can you come again?
You are not audible.
You're audible, but you're not clear.
Yeah. So may we request you to use your handset for optimum audio quality, please?
Just a sec, sorry.
Yes, please.
Hi, is this better?
Yes, sir, please go ahead.
Yeah. So just wanted to know, with the US subsidiary consolidation happening, what kind of guidance do we give for H2 FY24, and will our margins take a bit of a hit in FY25 because US business is a bit lower margin? So how do we see FY25 and the remaining FY24 panning out in terms of revenue and margins?
So I think as far as the U.S. business, we feel controlling business, I think that's not a very large, it's less than 10% of our business revenue. So even if you console that, also will not have much impact on the margin. That's number one. And your I think second question on the U.S. margin, I don't think so. That's a correct statement. What I think the previous gentleman was answered, it was on the price realization value, because Europe is CIF. On our apple-to-apple basis, on the FOB prices, the U.S. business is the most profitable business. So the more U.S. business increases, the more possibilities of margin expansion. Thank you.
Oh, thank you. So just wanted to confirm, so FY25, we are on track for 1,000 crore revenue with 20% plus margins?
Yes, I think so, based on what I had commented on earlier statements I had made, that company is putting every effort to be on the track of 1,000 next year.
Okay. Any risk that we see for that, like any speed bump that we need to be aware of that can come in for that? So just
any what? Sorry.
Speed bump or risk that we see for that target.
The world is, world is a very uncertain place, isn't it? So it's nothing that what you and me can do, but there are this geopolitical situation is, the cloud is on our head at this point of time. So we don't know, the U.S. elections are coming up. There's a lot of uncertainty around the world. So those are the geopolitical risks. Second is, I think on the other side, the inflation is very high. The interest costs are very high. But also, I think what we see on the sunshine on the horizon is that also that it seems that the interest rate should soften by coming 2024, and if that softens, then the housing market can boom again, at least show signs of recovery. So what we are showing you, the growth is probably the most adverse times in home improvement business ever. So I cross my fingers next year. If interest rates all go down, I think you may see better demand coming India and globally. Thank you.
Thank you, sir. We move to the next question. Next question is from the line of Moksha Shah from Yellow Jersey. Please go ahead.
Hello. Am I audible?
Ma'am, may we request you to use your handset, please?
Yes. Am I audible now?
Yes, ma'am. Please go ahead.
So my question is, if you can please help me understand, how is the demand panning out, especially in the export markets? Like, is it improving? What are the further growth levels which we are seeing in the export markets?
So like I said, that we've been maximizing our market share by taking more, adding more customers, expanding our product range. So I think overall globally we are maximizing our market share, since most of our competition was 90% comes from Europe, they are quite, they're having challenging times in terms of production costs. So yes, there are more opportunities. Second, we are in advanced talks with large export customers, so that can come into realization in Q4. So I think if that all comes into play, yes, you will see a upside on the export sales coming from Q4.
Okay, thank you. And my second question was, in which markets are we seeing slowdown in the demand for Quad 6, whether it is domestic or exports? And when do you think can we get back to the historical growth rates in this segment?
So I think one thing is we are very clear, and we want to stick to the fundamentals of our business, that the granite sinks are on the rise globally. So not a single market is right now on a decline. It may happen because of geopolitical situation like Israel and Jordan and some of the Gulf countries, but across I think there's a demand, and the demand is only increasing. It's not going down. That was the second question was on the historical. What was that?
Historical, numbers.
Historical growth rates in the segment.
Historical growth in 22-23. We can share.
Yeah, so that's what I'm saying, that, like I said, that I think we are on a track on 1,000 crore for next year. We have large opportunities coming in our way, and I think we are on track. I think, we would be doing our best to reach the historical numbers. Yeah?
Thank you. We move to the next question. Our next question is from the line of Nikhil Gada from Abacus AMC. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congrats on a great set of numbers. So my first question is on United Granite. So you mentioned that we are running this business currently at 60%, as in the business was running at 60% utilization. So is it fair to assume that at peak utilization, this business can deliver somewhere between 150 to 170 crores of revenue?
So I think on the peak, you can do about $15 to $16 million of business. So I think the 15 could be about 130 crores. Yeah.
Understood. And sir, this business basically, is it just the technology of doing the entire fabrication together, or is there some assets as well which are being used to make this entire product in-house?
Entire product?
The technology, what is the technology we are using and to make this?
So these are all completely CNC machines. So you get a drawing and then you customize. I mean, it's all based on bespoke. So every kitchen gives us designs and we do the CNC and then we install.
Understood. So what kind of
technology and the skill set what United Granite have, and they can make the fully integrated seamless integrated tops with the accessories and the faucets and the sink.
So what I wanted to understand, so I got that. So what is basically the asset in this, the gross block in this, if you can give that?
It's an asset-light model. Gross block is around 20 crores.
Understood. Got it. So my second question then is on, this 200 crores of plan that we want to achieve in domestic business. What kind of margins range are we targeting to achieve this 200 crores? Are we trying to work around 15-20%, or do you think that it can be much lower than the export market margins?
No. So I think we have always said the domestic business with our growth expansion, the margin also will range between 17 to 18% area. So I think we have, because the new product launches is a good high valued products, and so with the growth in the revenue, the margin expansion will also happen in the domestic market.
So we believe 17-18% is possible with this 200 crore revenue.
Yes.
Okay, sir. Just one last question, sir. This faucets and appliances, now that we have commenced, in this 1,000 crores of estimates that we have for FY25, how much would these two sort of categories contribute in our assumption?
Yeah, so right now I think what we have current breakup is 50% granite. Out of the total, I'm talking console sales. 50% granite. I think it's 20% is surfaces, 20% surfaces, and then you have 15% of stainless steel and 12% of the built-in appliances. So that's the breakup. So we assume that this share, I think the granite share should slightly improve on this coming year, on the next 20.
So basically, this 60% includes faucets as well in this the granite things, or faucets will be the remaining 2-3%?
No. So the faucets right now 2-3%, which is a very insignificant number we added in the thing. Right?
Understood. Okay. Fair enough, sir. Thank you so much.
Thank you. Next question is from the line of Nitya Shah from Kamakya. Please go ahead.
Yeah, hi sir. Congrats on a good set of numbers. So I just wanted to understand, I saw a big spike in the receivables of H1 of this year versus H1 of last year. So could you throw some light on that, please?
So the receivables have gone.
Yeah, so receivables have gone.
So we have improved on that.
We have improved on the receivable number of days. If you look at, we have improved on the numbers.
No, I'm saying as a percentage of sales. So you've done, say, around about 300 crores of top line in H1 of this year. The receivables against that are quite high. It's close to 40% of sales. So I just wanted to understand that.
So it's only something depend on the country to country export market. Like if we sell in France, the number of days are high. If we sell on the US side, number of days more. But it's overall it's on the decline trend because we have on the domestic side we have reduced our credit number of days. So it's only a cyclic and it is nothing. I mean number of days is not increased.
Okay. And second, I wanted to ask now
it's just the effect of the consolidation because the new consolidation of the company Tap Factory also came here, which was not there earlier.
Okay, fair enough, sir. And my second question was on the dealer network expansion. So now your dealer network has reached around about 3,200 dealers. So how has been the response of this entire network and how is the competitive scenario in India? Just to understand the consumer preferences in India. What has been your experience so far with the expansion?
So I think whatever the galleries we need to upgrade our current galleries in last 2 years we've been talking about. So we're going to upgrade, to increase galleries from 10 galleries to more than 60 galleries now. And now from quarter 3, we have again started expansion of the dealer network, which one of the gentlemen asked. So first on quarter 3, you will see that there'll be a sharp increase in the domestic sales. On second thing, I think on the consumer preferences, the more and more inquiries we are getting to open up a franchises or the displays as a same kind of built-in appliances. So we can see that our Carysil brand is emerging to be a very prominent brand, not just in sink but also built-in appliances in India. And I think this was the same feedback we got in the East exhibition in Bombay also. Third thing on the preferences, I think we see a great shift that people are moving from stainless steel sinks to the granite sinks. So I think that preference is coming into play. The more colors are coming into play now. And this idea of a one-stop solution on one service by a click of a button on a WhatsApp, you can service your Carysil kitchen sinks and the built-in appliances. I think it's going to ease the customer pain. I think they absolutely like it. So we believe that Carysil is strongly emerging as a very prominent brand in India.
Thank you. We move to the next question. The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers, and thank you for taking my question. So my question, as in for next year, you have given a guidance of 1,000 crores. So any guidance you would like to give for this year also?
In my last call, I think said that we are going to be in the annual rate, going to start hitting the annual rate from this quarter around 750 crores. So I think we are quite in line with that. Yeah.
So from the Q3, we expect that.
Yes. Yeah.
Got it, sir. And sir, on demand side, how are we seeing it? Because it's like a mixed signal. We are seeing a lot of issues in export side, but our company has done well. So can you comment on that, please?
So number one, fundamentals of the business. Again, I'm saying the granite sinks are the fastest moving category in the home improvement section at this point of time. Second is that India, especially Carysil, has a massive opportunity in terms of maximizing their market share. As well, we have lots of inquiries, global inquiries. People want to come and source things from India. Because our 90%, which is about 4 to 5 million sinks of competition, comes from the Western countries, which they are finding very challenging times with increase in cost. So we absolutely believe in coming years, we can not only emerge to be as strong, but there is a large potential for us to become one of the strongest players in the world in terms of granite sinks. manufactured from India. So that's what the flavor is right now.
Got it, sir. And sir, in this quarter, we have seen a reduction in the COGS. So gross margins have expanded this quarter. So can we expect this kind of numbers to continue?
So the material prices for this quarter was still down and currently is stable. So I think we believe that this material cost will remain in same territory for quarter 3. So let's see.
The margins will sustain.
And the margins should sustain, because if the material prices are remaining stable, I think we should have the same kind of margin.
Thank you, sir. We move to the next question from the line of Sampath Nayak from Tiger Asset. Please go ahead.
Hello, sir. Congratulations on the good side.
Sorry to interrupt, Mr. Nayak. May we request you to use your handset, please? You are not audible, sir.
Yeah. Can you hear me now?
Yes, sir. Please go ahead.
Yes. Congratulations on good set of numbers. So my question is mainly on United US acquisition. So, sir, can you give numbers on FY23 sales and EBITDA numbers?
Yeah.
For the US acquisition?
Yeah. So you are talking about FY23 projected?
Yes.
Okay. So I think all I can tell you, the FY, how much was the FY?
FY20 is 12 million.
Then the 6
months around 4.8.
Yeah, about 4 points. So it was about 4.8 to 5 million dollars. So based on that rate, I think you're looking at about close to 9.5 to 10 million dollar sales this year.
Okay.
Which we obviously got a console from end of October only. So I think we will get the benefit to that extent in the quarter 3.
Yes, and it also will be improving EBITDA margin from 7 to 8 to 15%. Can you throw some light on how exactly we are planning to do that?
So I think this company had issues with a lot of working capital, and that's why they've been able to sourcing the material locally only, while we've been able to strategize that to buy bulk quantities at a lower rate. So I think that's going to start soon. So moving forward, you'll see improvement in the EBITDA margin.
Thank you, sir. We move to our next question, which is from the line of Aditya Pal from Motilal Oswal. Please go ahead.
Hello, sir. Am I audible?
Yes, sir. Please go ahead.
Congratulations on the good set of numbers. So just have a couple of questions.
Sorry to interrupt, sir. May we request you to use your handset, sir? Your audio is not clear now.
Is it better now?
Yes, sir. Please go ahead.
Yeah. So when we look at exports, so exports have really grown well. So just wanted to understand geographies are the growth pockets coming from?
Opportunities?
From where the growth is coming?
Yeah. So the opportunities right now hangs, I think, across. Mostly it is coming from the United States, but it has also the countries around the world are also showing signs of improvement. So there will be the more momentum should come more from the U.S., Europe, since there are some large bulk opportunities which we are looking forward coming in the horizon in quarter 4. Yeah, but overall, I think the trend is improvement across globally.
Okay, but if you were to pinpoint a particular geography or a bunch of geographies where the growth has come from, and to where the management is seeing the opportunities coming from?
I see that the number one, a large growth coming from the U.S. That's one. Number two, all the more opportunities in the emerging countries, like I mentioned in my speech, that the new territories, UAE, Australia, Turkey, they are doing quite well, including Australia, South Africa, and also. I think that's where we're going to see a very strong growth. That's 2. 3 is that the acquisition in the UK, which we had done with the tap factory and the Silmas offices. So that distribution is coming into play. So if you would have seen the UK sales, they are almost in par with during the COVID time we had done sales. So sales are at about Carysil Products Limited is at about 4.8 million pounds, which has grown about 30%, if I'm not wrong. So that's where basically we able to expand the customer base by as more as 30% in UK. So I think the next will be the Germany and the UK. Germany, UK, Denmark, Sweden. IKEA is now bouncing back with some new orders, with some new models. They started in India, so I think that would be all the growth we are looking coming from those countries and those customers. Thank you.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. I would now like to hand the conference over to Mr. Chirag Parekh for closing comments.
Thank you, everyone. I hope we have been able to answer all your questions satisfactorily. However, if you need any further clarifications or want to know more about the company, please contact SGA team, our investor relation advisors. On behalf of my colleagues in Carysil Limited, I wish you all a very happy Diwali and hope the year and the new year brings a lot of happiness to you and your dear ones. Please be safe. Thank you.
Thank you. On behalf of Carysil Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.